We're on a depression right now. A recession is 2 quarters of declining growth.
Right.
But a depression is suboptimal growth. So you could have, let's say that your GDP should be 4%, but you're operating at 2%. That's a depression. People don't know history. Is that what happened on September 17th, 2019? There was a crash in the repo market. The average person has no idea what the repo market was. That what happened in 2021, so they pumped up. So the last time there was a crash in the repo market was 2008. So I'm sitting here in 2019, September 17th. It's like, my God, the repo market crashed. And then a few months later, COVID appears. I went, oh my God, here it is.
Can you tell us what the repo market is?
Repo market is, I call it the pawn shop. It's where people go in there and what happened at the repo market is the Fed starts pumping money into the commercial banks like Bank of America and those guys, Wells Fargo. So they started pumping money into the banks because the banks were empty. That's what happened when Lehman Brothers went down. They didn't have enough cash in them. But it's not even goes into the economy. It stays within the banking system. So what happens in a reverse repo, so 2008 was a repo, 2019 was a repo, and then what happened in 2021 was a reverse repo. The money started coming out of banks and going back to the Fed. Now the average guy, what does that mean? It means that the commercial banks don't trust their assets. Their assets are questionable. It's the valuation. Valuation is an opinion. Mm-hmm. This house is worth $10 million, but that's an opinion. So they started wondering what was the true valuation of their so-called assets. So the money started coming out of commercial banks like Bank of America and Wells Fargo, flowed back into the Fed because they'd rather have it at the Fed than in the marketplace.
So you're saying banks don't trust their own assets that they're investing in?
Their opinions.
And they don't like the opinions anymore?
No.
I mean...
So I'm the most boring guy on earth. My friends are billionaires. That's what we talk about. The average person has no idea what we're talking about. We have to watch the flows of cash. That's why my game is called Cash Flow.
Yeah.
I'm watching which way is it flowing.
I mean, if you look in hindsight, 2001 seemed obvious. 2008 seemed obvious.
But people know. I'll bet you $1 million. You ask 100 people what the repo market is, you'd be lucky if 50 know what it means. That's not a mistake. It's not an indictment against them. It's an indictment against our school system.
Do you think that our stock market is a bubble?
It's criminal. I mean, the only reason they gave the CEOs all that money is so they could repurchase their stock. So let's say I'm IBM or Ford. You give me $1 million, right? So I borrow $5 million from the Ford's treasury. I buy $6 million of my stock. It jacks the stock price up. So mommy and daddy with their 401k, the Ford Motor Company went up in price. It's all floating on debt.
And you think this is on its way down?
Let me just say this much. Markets go up and markets come down. It's coming down. And then we're going into depression, and then we go into revolution.
What does a depression look like?
Depression is when more jobs are lost and they're going to have to print more money. Just as they did to prevent when Fauci, fascist Fauci, shut down the U.S. economy, the whole world economy is shut down. How can they pay people not to work? America is now the largest debtor nation in history. Student loan debt is out of sight. Consumer loan debt is out of sight. Stock market is all based upon debt.
We have more national debt than GDP.
I don't know the exact numbers, but I think we're pushing the debt to GDP ratio. Okay, with the debt to GDP, it's really simple. When debt to GDP hits 90%, so we have 90% debt to GDP. That's pretty optimal. That means every dollar you borrow, when it's 90%, the economy grows by 10%. So it's a 10 to 1, a 10% ratio. Today, the debt to GDP ratio is 140% to 1. They cannot add any more money to it. It's not going to grow. That's what it means. So it's like a guy who has a house that's in he kept refinancing his house and he loses his job. He can't borrow anymore. So that's what happens when the debt to GDP went past 90 to 1, 90% debt to GDP. Today it's 140%. We're bankrupt.
How long?
But the average guy has no clue what I just said to you.
How much time do we have left?
We're already finished. Gold, silver, Bitcoin, bullets. Only reason I buy Bitcoin is I don't trust my government. I don't trust the Federal Reserve Bank. I don't trust the Treasury. I don't trust basement Biden, and I don't trust the stock market. Now, if you trust all four of them, have a good life. I have gold, silver, Bitcoin. So Bitcoin is a bet against the government. I'll say this one more time. If you study Marx, a central bank is essential to communism. That's the Fed. It's the third central bank we've had. It came into existence in 1913. In 1913, the Fed was created, so was the tax department in 1913. Oh, coincidence. The average guy has no idea that happened. The other thing about Bitcoin is my basis is $7,000.
Meaning you were buying Bitcoin at $7,000.
Yeah.
$7,000.
So always remember your profit is made when you buy, not when you sell.